So dear friends, now in this video we are going to see what will happen to Australian dollar versus Canadian dollar. And again, this is a trading without indicators. I'm gonna show you now. I have already sold the market, so I believe the market will fall down more and it's going short, and I will show you why I took this decision. The common mistake of many young traders, unexperienced traders, is they just use a lot of indicators like this. Look at this. A lot of beautiful indicators. And of course, each of them has a sense, but the majority doesn't know how to use them and when to use them. You can't use them always. So the next question is, what will you do? How will you trade if you have no indicator? And the most important question is, when will you have movement in the market? So how can you time the market at its best? The first step is, if you look at this chart, a lot of people are making this chart bigger, like this, and they just see this period of the market, right? So from here to here, in this case, okay, you can say I sell the market, but sometimes the market is showing you just this picture, but in bigger picture, the market is running up. How can you find it out without any indicators? I show you how it is working. The first step is go and zoom it out, zoom it out, zoom it out, much more zoom it out. And now we see we have a lot of irritations here, right? So sometimes the market makes a big move like this, and then coming down, newspapers writing, oh, the market is falling, right? Like this, oh, the market is falling. But what happened? The market rised again. And also here, the market will rise again, but the market coming down, right? To avoid this, I show you a simple indicator. You can use them, and the indicator, you can find it here. Nearly on every chart is an old. The indicator is called zigzag, right? You can use different periods. So I see this one. This is the smallest. Now I make the chart a little bit bigger. I know people say, oh, looking that way, the market is rising up. Why? Because you see here, higher highs, higher lows, higher highs, they buy high, but the market falls. Then the sell is all right, sell, 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 market going up, they take profit, they go long, but the market falls. So if they would stay here, they could have profit. So I use different kinds of zigzags. This is the smallest. Then I use another one, and another one, and another one. Now you see, on a bigger picture, the market is running down all the time. This is the bigger zigzag, right? If I zoom the markets more up, we see, look at this. This is the way it's looking. This is the way it's looking. This is the way it's looking, right? See? I'm going back now till April 2017, and what I see is following. I see here the highest high was here already. The next biggest highest high is here. So the market is coming down, right? And also the lows. So this is the lowest low of the last 2 or 3 years. And guys, see here, nice working. So we had higher lows, and then lower lows. Got higher highs and then lower highs. So a common indicator that the market is coming down. This is the first indicator I recommend. So you gotta see the market always in a bigger picture, because there is a lot of more force behind of that. And we are on daily chart. So why trade daily chart? Because there are much more potentials to get more pips. And at the same time, we have also, of course, bigger risks. So your stop loss strategy should be also differently if you trade, for example, on hourly chart, on monthly chart, on a weekly chart, or also 5-minute charts. It's dependent on what you will do. So I'm going to take the long-term, mid until long-term movement of the market. A next indicator I use to find the bottom is RSI. Common RSI 14 periods, and this kind of 14 days period. So we gotta see here some indications. So we see here, for example, at this period, the market had a low. This is this one, right? Something here. Then the market makes another deeper low. This is right. So we have a divergence. That means the RSI doesn't move lower as the market moves lower. So we can expect that we will have here a correction. And look what happened here. Some days after, the market rose up. Then the market makes a new low. We had a correction. The market RSI makes a new low. The market makes a deeper a new low. So the lows are going down. RSI didn't make a new low. It's going higher. So we have another direction. And look, 2 days ago, 2 days after this event, the market rose up again. Then, after this correction, the market made a new low, but RSI hesitates to make, refuses to make new lows. It's going up, and we can say, all right, possibly the market finds a new bottom, or some events will happen in the market that the market is stopping to move much more downwards. So it is a possible opportunity to take here some profits, or we can now bring our stop loss order to this level. As you can see, what happened again. After 2 days, the market is going up, but the RSI has warned us already 2 days before it happens. At this level, the market makes a new high. The RSI is making also a new high. Then we have a consolidation. The lows are still there on the same level. RSI also in the same level. And then here happens something very interesting. From this level to here, you see the market makes a new high, RSI makes a new high. The market makes another new high, RSI is making also a new high. The market makes a breakout high, but RSI is making, but not too much. It's always on the 60 points or 60,000 areas. So our oversold is over 70,000. So we can indicate now it can be a wrong or a fake breakout, right, from this channel, as many people start to buy this market, but the market falls down. This is the reason that a lot of breakout strategies are making good profits, but only 30% of them are profitable. So always watch on what the market is doing and this indicator is doing. Then the market makes a low, RSI is making a low, the market makes a correction, is coming down. What will happen here is the same happening. On the same time, the lows are falling, right? This is the reason I have already sold this market with a stop loss beginning from this point and a trailing stop. That is now my position. The trailing stop is now a stop profit order just for one contract. So my expectation is the market will fall down more because of the zigzag and long-term movement of the zigzags, as we can see it here. The trend is clear down, right? And what we have here is still a correction. So I expect that the market comes down here, maybe here, right? We have here a confusion area. We have here a confusion area where we had the wrong breakout. So of course, someday the market will rise up again, but I expect again that the market maybe at these levels start coming up again. As we can then notice here, higher lows, higher highs, then the market makes 1, 2, 3, 4, 5, and goes again, 1, 2, 3, goes again, 1, 2, 3, 4, 5, and so on. But the trend will be clear here. So something around here, right? So if you're long, then put your stop loss in any case here. If you are long, if you have bought the market, if you are wrong, and if you're short and sold the market and trading the trend, then place your stop losses here and here. If you're taking the movement of the market, then trail and look also on the inside bars. And in this case, if you are taking just the movement, that means only the red lines, and get out if the market is green again, then you have to use the inside bar strategy to trail your stops. All right, and have a good day and have a great trading day.